Welcome back to the channel, everybody. So today what I thought I would do is just do a quick video just in regards to the risk management side of things in regards to trading. So first up, what I have created is a risk management indicator that you can use to get your position sizes correct based on your risk management of account. So I'm going to talk through that. And yeah, this is obviously one of the biggest things in trading. So this determines whether, number one, you'll be profitable and be able to manage drawdown, or just blow up accounts. And obviously the emotional side of trading feeds into this as well. But for the most part, if you get your risk management right and you're not sweating in a position and you can manage the risk or manage the loss and stomach the loss, then for the most part, you should be able to trade effectively and profitably and get back in profit while still managing periods of drawdown. So the indicator is, let me just go into the Whop. I'll quickly take you into the Whop quickly, of which I don't know why. Not get access. So to get access to this, I will post the link for the Whop in the description. So it's whop.com/DDT-indicators-free. There'll be get access once you've signed in and got a code to get into a Whop account or create a Whop account. Totally free. What you do need to do is, obviously, it will link your trade. It'll tell you to link your trading view, then you get access and that. So we can go over that in another video, actually, how to kind of get access. But this is just a quick draw through of how to get access to the indicators. In the indicators, it is called should be called DDT Risk Management and Position Size Calculator. Let's just look on invitation only if I have it here. Yeah, DDT Risk Management. Oh, sorry, I haven't even favorited it. And Position Size Calculator. It will be locked. So if you want to use it, obviously go through the Whop, get access, and go through there. So yeah, so you'll click it. Obviously, I have it loaded already. It's here, DDT Risk Management. So you'll see at the bottom there is a table. The table tells you account sizes and all that. That's just a pre-population of the data, right? So when you click the settings, this is where you put your parameters and how you it will tell you what to use, what position to use, what size, but I'll go through these in a minute. So let's just go through all the variables and inputs in this indicator. So account size. This is the dollars that you have in your account. This is obviously for display purposes only. This is not the size of my accounts, but generally or hypothetically, this is because kind of the examples I had kind of put as defaults. So hypothetically, on average, say someone has $1,000 in their account, right? Ideally, you should be your risk. So that obviously you put there, right? $1,000. Your risk percentage is how much percentage-wise of your account. So obviously each of these has tooltips. So if you click over the eyes of everything, it's kind of self-explanatory, but I'm also explaining it. So the risk percentage is how much percentage risk of your total account do you want to risk on a trade. Ideally, you want to be risking anything generally from around 1%, give or take, 0.5 to 1%. So if you go 0.5 or 1% hypothetically, because this is generally classed as a small account, right? And also can be predetermined by the type of trade you're taking. So obviously on scalp trades, I generally aim for 0.5 to 1% of my total accounts. But with kind of a swing trade, I would go upwards to 3%, 2.5%, 3% to swing for the fences on it. And those are obviously few and far between for now. So hypothetically, just in this example, let's use 1%. Your stop loss is when you're looking to enter your trade, you determine your stop loss before you enter the trade. It says, yeah, how far is your stop loss from your entry on the trade you want to take or enter? So obviously, if you're using a 1% stop loss, cool. So obviously, the distance from your entry to your stop loss is 1%. Hopefully, that's self-explanatory. Then your leverage also determines the kind of how much margin, because obviously leverage kind of allows you to up your position size while being risk averse to kind of having to use all your capital. So I generally on my scalps I use 20%, on my swings I use 10%, but just for this example we'll leave it at 20. Hypothetically, I would say if you are on a smaller account or you're still learning to trade, I would say keep this below 5. So 5 to 10%, 5 to 10x leverage max. So obviously click the tooltip, how much leverage are you using on the trade? 20% or 20, not 20%, 20x, right? And then obviously I have a position, table position, yeah. So basically all this data in here, it will populate into the table kind of at the bottom of the screen, depending where you position it. We can put it top, middle, middle. We can put it middle right for now. So you can put it there for now, so it's right next to the chart. So why is that there? So that looks a bit better, right? So if we go back in, based on these parameters, you got $1,000 account, 1% risk of account on the trade, with the 1% stop loss, with a 20x leverage. So obviously these populate here to the side of this table. So obviously 1,000, you have a 1% risk. You're using your risk amount is $10. So that means obviously what you're risking on the trade is $10 of your own capital. That isn't populated in the settings, but it's populated on the table that pre-populates. Your margin to put in, see if you're using 20x leverage, risking $10 is $50. So margin to put in dollars is what you would put in the trade, right? Obviously your leverage 20x because you put it in the table, and that just also determines your position size at $1,000. So with this, with a $50 20x with a 1% stop loss, you'll risk $10 of your account. So obviously you can up that, you can have a play around and mess around with it, but hopefully this is quite self-explanatory in regards to your risk management. Hypothetically, if you have a $3,000 account, you're risking 1%, you'll see obviously it will go up 150. So ideally, to kind of remain profitable or kind of be risk averse to draw down and also to try and get profitable, risk is kind of one of the major things. Risk management is one of the major things that will keep you profitable. So just bear that in mind. And yes, it's tough. You see everyone flashing P&Ls with making $2,000, $5,000, $10,000, $50,000. You don't get there by just going gung-ho and throwing all your margin into a trade. Trading is not a sprint, as a lot of people may say. What's heard kind of over what a lot of traders say. It's not a sprint, it's a marathon. So if you're risking management, if you have good risk management and you are sticking to clear risk defined rules within your risk management, also as well, there could be entry criteria for your trades. There's other things that add to this, but this specifically here will help at least you manage the dollar side of your account. Sticking to 1 to max 3% of your accounts, or even 0.5% up to 3% of your account per trade, depending on the trade, depending if it's swing, depending if it's a scalp, or any of those types of trades, will keep you in the trading game for longer without blowing accounts. So we'll leave it at that for today for this one. If you've liked this content, obviously like, share, and subscribe. Obviously, the Whop, I'll put in the link of this video. I know I've not done that before previously because I kind of wanted to keep it gate kept. But yeah, I'm happy to start sharing the Whop out now. So if anyone does see this publicly who's not in either Frankie Candles' Discord, Alexo's Discord, or Geo's Discord, or even Flopping Groper's Discord, where I've shared these, then yeah, this will be widely shared going forward. And then yeah, use good risk management, and you'll stay in the game of trading for a lot longer. We'll see you in the next video. Take care.